The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Welcome, folks. This is Tom O'Brien. We appreciate you growling and prowling out here with us. Right now, you got the S&Ps up $6. You got the NASDAQ futures up 9. Russell's up 2.5. We have gold down $2. Silver's off 3 cents. Platinum's down 5. Bonds, we have the 10-year down 6 ticks at 126.23. The 30-year off 13 at 158.09. And King Dollar's up 700 ticks at 99.31. The euro's down 108, trading 105.89, and the yen is out there at 121.51. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, let's go to the world of the S&Ps, folks. If we take a look at the SPY first, what you're going to see is this. We bring the SPY up, and what we had out here yesterday, you had the expansion of volume. You went south. The SPY yesterday did, let's see, we did 157 million shares. Now, that's lighter than Friday, because on Friday we did 188 million. So what you have is this, is that on the pure definition of an ABC structure on the way down or the way up, you did not take out the B point with volume. That being said, I suspect you're still going to basically go after the swing point from December 16th, which you're dealing with there. We're 204. We're dealing with a 198 there. Now, NDX 100. This is what gets really interesting here. So the NASDAQ and the NDX 100 itself has been much stronger than the S&Ps. Well, guess what? The NDX 100 took out the B point with volume. That's a beautiful thing. What does that say? What does that say, and what does it set up? What it sets up, folks, you get an ABC structure on the way down. First off, we're at 105.72. What happened with 105.72 is that you get back inside the lower range. 106.25 is in the lower range. So what does that set up? That sets up also you're going to run down to this 99.36. So the context of where we are right now is pretty intense. The bounce that you're going to see out here this morning, I suspect, and this is where what you're going to see is that more than likely you're going to be a flat market. It's going to bounce on light volume. And what does that set up? That just sets up another leg down. Because what we do have is this, is that when you come down, like we did yesterday, that takes a large amount of energy out of the marketplace. That's the way that thing sets up. What is intriguing about yesterday is this. Absolutely zero fear. Zero fear. The tick. Okay, so what the tick index is this. We did a minus 941. That's nothing, folks. That's like breathing, okay? That's no one cares about a thing. Don't worry. So when you have a minus 941, what that sets up is lower prices. Why? Because there's zero fear. I mean, markets don't bounce until there's fear. Because what ends up happening then simultaneously, everyone's selling the same stocks. Those get oversold, then you get a bounce, and that's all it ends up being, is a bounce. Now, let's go over to the bond market, because the bond market right now is really intriguing in the aspect that I think we have a much larger change of trend. And we'll get a really good idea of that in the next few days. Yesterday, we got basically a little information. And what that information was, if we use the TLT bounced yesterday, and we did 9.2 million shares. Well, we came down with the 20 million. So you still have an ABC structure on the way down. What I suspect what's going to happen here is this. It's probably going to turn into a complex ABC down. All the complex ABC down means is this, okay? The ABC structure itself goes like this. A to B is a straight line move. B to C goes all over the place. Messy. C to D is a straight line move. When you get a complex ABC structure down, what happens is this. You get A to B, straight line move. You get the B to C, and then you get the C to D, and as the C to D is taking out the B point, it takes it out with volume. Then what ends up happening, just like this, it's like a failure. You go back on the other side of the B point. When you do that, the way that you understand that it's a complex one is that you'll come back on the other side, and you're going to go up into the top of that B to C with lighter volume. And that's what the TLT is doing right now. So this is going to get interesting and will give us a lot of information, because the top of the B point, C point on the TLT is about the 130 mark. And I don't think it's going to make it to 130. We're at 126.28. I can see that, you know, get into 128, somewhere like that. So we'll see how that shakes out. Now, what that says, this is a large one. You know, your A point on this is 138.50, and your B is down there at 126. So you're talking, what, 38, 20? Yeah, you're talking 14 points, 13. So you're talking coming down to this 117 area. The correlation on the next time down on bonds, and this is where you get to really wrap your head around this, whether we do have a larger change of trend, is that if we get another expansion of volume on the way down, bottom line, that is a change of trend. And we'll see whether it's a much longer change of trend. There is no doubt that what the bond market has done, but hasn't done it for a few years, is that the bond market has had large corrections. And in fact, here, let me show you something here, because this is really cool. This is where I'm going to gauge off of, and it will give you a hint as to what you should be looking for. I'm going to take the bond, and I'm going to put the 10-year on a continuous contract. And I'm going to bring this back 15 years, because what many folks had thought is that as we were coming back into the lows that were established in the beginning of January of 2014, they thought that that was it, meaning on that as we come down, that was the bigger change of trend in the bond market. What was happening there, folks, okay, was that all that was doing it was doing it with lighter volume. That was coming into the breakout area from 2008. It was coming into the breakout area from 2013. That's all it was doing. It was doing that with lighter volume. In fact, here, it'll be easier putting the TLT up so you can really see how this correlation. Because this, what happens on a longer-term chart, it's much easier and cleaner reading it. It takes longer for the numbers to come in, but it's cleaner. So watch what happened with the TLT. When we had broken topside in 2011, we broke topside, went from 97 to 112 with 489 million shares. When we backed into that with 146 million. Big difference, right? Yet, the bond market had gone from 132 down to 101. It was like the end of the world. Well, it wasn't the end of the world. All I was doing was coming back to the breakout area. Okay, now let me show you what the difference is. This is what the difference is. The difference of how we came off, when we came off that high, the high was 132. When we came off that high with low volume. We hit a high up there. We did the high with 131 million. Then we did 158, 122, no big deal. Well, watch this one. This one, we go up there at 197. We came off that high with 202. Different ball game. 202 versus like 158. Now, is it in the bag yet? No, it's not. But what I expect we will see, well, we will see this period, and it's either going to have higher volume or not have higher volume. And what it is that right now we're at 126.28. We did 222 million from 116 to 127. How we come into that is going to tell us quite a bit. If we come into that and we're banging only like 200 million or 180, guess what? Bond market's not over. That's how that's going to shake out. It would be an ABC structure down like we're doing, but that's it. It'll be another change of trend, shorter term trend. You're going to go into that 116 area. Volume will die. Guess what? It'll go all the way back up to the 138. That's one scenario. That'll be a scenario that the bond market's not over. The second scenario that the bond market is over, you come into that area with expansion of volume. You come into that area with expansion of volume, it'll be easy to break the swing low down there at the 101.17. So we'll see how this whole baby does shake out. Gold. We go take a look at the gold market. What we have with gold market is this. Gold market, let's see. Let's put this baby up. Okay. Gold market out here today, we're trading at 1158.10. Now, geez, what we have is this. We're at 52,000 contracts right now. The last Friday we did 215,000. We did 178,000 yesterday. This is what it takes to basically get into a bottom also. Let me just see this. This is good. Okay, so check this out. So we take a 10-minute chart. We have no sellers out here this morning. They pushed it not into the low. The low of yesterday was like 1153.80. But thus far, you really don't have any sellers out here. And what it does take, which we have done, is this, is that you've got into the low, and it's not that we have lighter volume yet, because it's going to be hard to gauge. 52,000 will probably come in with 130. So the real key is going to be, you get into with 130, is this contract going to be able to trade over 1162.90? That's what you're looking for. 1162.90. And what that is, folks, that would be getting into the trading day from the Friday. And the lower end of this whole range is the 1132 area. We'll see if, in fact, that baby wants to get into that. Now, King Dollar. Let's go take a look at King Dollar, because what you do have, and this is what you want to line up in the context of where we are in all these markets, is that King Dollar is approaching the B point, rather the C. One second, sorry. King Dollar is approaching the 101 area. The 101 area is the first A to B equals C to D. Right now, we hit 100.14 this morning. What you very well could have is an extension of that. We'll see if that's what we're going to get. King Dollar this morning thus far has done 29,000 contracts, and King Dollar has shown not only the wide price spread, but, man, yesterday we had 40,000 contracts. So this thing is moving, and moving with a vengeance. The thing that gets intriguing about this, now this is where this really, this is about as wild as it gets. Stay right there, because when we come back, folks, I'm going to walk you through the continuous contract, because the continuous contract on King Dollar is saying, hey, guess what? King Dollar can be freaking King Kong. This is Tom O'Brien. This is TFNN. We get the S&P's up 4.5 right now. NASDAQ up 7. Gold down 210. Silver's off 4 cents. And King Dollar is up 785 ticks at 99.39. We're going to be right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the S&Ps right now up $5. You get NASDAQ up 8. The gold is up is down 280. And as one of our Tigers mentioned, and I would thank Z, what we did have is that you had the, if we go take a look at the S&P futures, folks, the S&P futures did have volume when they broke their B point. So bottom line is that it just made it too, but bottom line, it had the volume in it. If we take a look at this ES, what you're going to see out here, let's put this on the daily. What you're going to see is the daily out here. Volume-wise, this is what we had in the futures. We did let's see. So it was 1.8 million contracts. That's the bottom line. And the H5. So we did, this is, whoops. We did, on Friday, we did 1.895, and then yesterday we did 1.899. So bottom line is that you did it with juice. What's going to be intriguing here is that just what types of bounces we have and when the fear will come in the marketplace. Because until we get some fear in the marketplace, this thing was going to basically continue to go lower. Now, we were talking about the dollar, so let's go over and I'll share a continuous contract. This will be a mind blower. I'm telling you, this is like totally crazy, but the way this is setting up right now, you got to pay attention to it, and this is what it is. So we have a long-term, we have a continuous contract up, and if we take a look at this, and I'll put this on a monthly, what you're going to see in the dollar index is this: is that we go all the way back to 2002. 2002, the dollar's at 120, 120.80. That was truly king, right? Well, the dollar's truly king against all currencies right now in an extraordinary way, too. Well, what we've done is this. We consolidated, and we've consolidated since 2004. So let's say, oh, my God, hold it. It's 2015, right? Well, a normal way that technically you'd look at a market, particularly I look at a market after consolidation like this, you can take the top of the consolidation, which is 92. Then you take the bottom of the consolidation, which is 70, right? So it's 24. Well, you add 24 into 92. It's like, okay, you know, 92, 20 is $1.10, right? Let's see, no, that's $1.12. No, it's oh my God, hold it. 20, yeah, it's $1.10. $1.12. So it's $1.16. That a normal deal's at 116. Well, guess what? There's nothing in between here where we are and all the way up to 111. So, you know, look at this dollar right now. We're in a whole different ballgame, you know. So we'll see where this shakes out. But when I look at this, that's telling me that's where it's going. Let me bring this back further, actually, which is just a mind blower. But you know what? When you come down fast, and then you consolidate, you can go up just as fast. There's just basically nothing stopping it. So we'll see how we trade out once we get to this one-to-one ABC structure on the way up. And, you know, we'll also see what the metals market will do in correlation to that whole deal. So if we go over and we take a look at the XLF, what it looks like, folks, the XLF, whatever's going to happen. So what we're going to have out here tomorrow is this. Tomorrow, the stress test, the second part of the stress test is going to be out there. Now, the first part of the stress test, all the banks come out with flying colors. What was, I thought, inside that stress test, which is really wild, is that the stressing of the marketplace only took the Dow down to 8,000. I thought that was like, okay, you're down to 8,000. Yeah, I understand, you know, the Dow's at large numbers right now, but that's certainly not a stretch to get the Dow to 8,000. Anyway, that being said and done, what you did have out here yesterday is that the XLF came down with juice, had expanded volume. What's hanging out here is that October 15th swing low. That October 15th swing low is going to get hit. Your first swing low in the XLF is this 23 area. Your next level down there is the 22. Bottom line, though, it's going to get hit, and we are short Goldman Sachs right now, but something's going on with Goldman Sachs. Goldman Sachs got hit, and it got hit pretty hard. You stay right there, folks. We'll be coming right back with the opening bell for you. Right now, you got the S&Ps up by 5.5, Nasdaq's up 7.5, and you got gold down 250. We're going to be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 41. You get the NASDAQ up 5. S&Ps are up 5. We have gold down 240. And what you're going to see out here, we're going to get probably a small bounce, flat markets, and you're going to have no juice behind the move. And what that is all about, folks, is that you get fast moved yesterday, expended some energy. You're going to build a little bit cause here for the next move down in the marketplace. You know, pretty intense when you take a look at the whole aspect of what we have. Some of the equities getting smoked out here. You get Vera Bradley's down 10%. Western Digital's off 2%. What else we got? Inside the Dow, let's see what we have happening here. Inside the Dow, we got Big Blue is up 30 cents. Honeywell's up 10. You got Merck up 43. Walmart's up 20. Coca-Cola's down 5. Some of the higher volume stocks, even though it's a low volume market out here today, is that you get Apple down 1, Bank of America is up 12 cents, Advanced Micro's flat, MasterCard, oh, let's go, okay, that's what we want to go. I want to see what's going on with these. So MasterCard and Visa yesterday, let's go to Visa first. See what we have happening here. So Visa has, now these equities have been you talk about, there's nothing like basically in the transaction business anyway, but what we had is this. Visa had made a high at 278. It did 2 million shares. That high was generated out there on the 3rd of March. We come off that high, and we come off that high with 2.8 million, and yesterday we did 2.7. That's going to set up that it wants to basically get back to the 270, 239 area. Now, that's a big hit. Now, that all that actually is a retracement coming back to where its strength was. Now, the gap that's open, and this is where it's always dangerous inside large gaps, is that most times you're going to come back to the top of that gap first. You go sideways, and then you go close the gap. Well, closing that gap is down to 213. And, of course, 213 coming out of 278, that's a big number. That's absolutely a correction, you know. So we'll see how it gets into that number, but it looks to me like that's where we're going to be going. Oh, let's go back to here. We're short Goldman Sachs, but I want to show you something here. Goldman, okay, the way and a lot of the financials are set up like this, by the way. They actually all are. What you did have happen is this. Is that how we came off of the highs in December? We came off that high with volume. It's like, okay, man, what's going on with these banks? You know, is the stress test, is there something that's basically laying on those books that they're going to get smoked with? Now, we certainly don't have mortgages that are out there that are bad. That's been basically cleaned up. It's still being cleaned up, but that's not it. I started thinking about this yesterday because I'm looking at the stock saying, man, something is whacking this thing, and someone knows something, okay? Because the way this came off the highs in December was like, man, that came off with big volume, 65 million off the high, right? That's been the highest, you know, and an equity that comes off a high with high volume is a problem because that's a large fund. Large funds get to know more than you and I know. And that's just from doing research. That doesn't mean it's insider trading any of the above. But that's what they do. They have to do it. So, in that context, what does it mean? Well, you know, we'll see how this shakes out because Goldman has a high volume low trading out there at that 171, going all the way back from October 15th. And that may be it. What I start looking at, though, I'm saying to myself, you know what's going on? Is that they very well, this could be all the banks too. The currency deal, because our banks, okay, because our dollar has gone so fast, meaning up, that the banks themselves can be on the hook for big, big dollars. That's the way that I'm looking at this right now. And whether they sorted out dollar bonds, whether they sorted out money that has been lent out, and they're holding the paper. So we'll see where that does shake out. But it looks to me like these banks are going to have some problems. And they shouldn't have problems if, in fact, the rates are going up, because then the spread should be better for them and bigger for them, and they should be able to make some money. But there's something out there that's hanging up these banks and hanging up these banks pretty good. So let's go take a look at the futures right now and see what we have, because the S&Ps, they're having a hard time holding up at all. And, okay, so if I put this on a 10-minute, what you're going to see is this. And by the way, folks, what we did do, you know, we're at 2045. That whole thing, and that's what we had done. We finished an ABC structure on the way down. And when you also do that, you do something other to build more cause for the next move. ESH5. So what I expect you're going to see, well, we'll do this intraday here for a second. So if we take a look at where we are. Okay, so the first sell down, watch this. Oh, this is pretty cool, man. This is great. I like this. Okay, your first sell down had 82,000 contracts. Well, guess what? 82,000 contracts was going into 115,000 contracts from 3 o'clock yesterday afternoon. So it's going to need more to break that down. You know, what I expect you're going to get, that's going to stop it for a bit. You get a sideways move. There's not going to be a lot of action out here. If you're a bull, what you actually want happen is you actually want to get to a lower low right now. If you're a bear, you actually do want a flat market and a little bounce out here. I know that sounds deviant, and it is. But what it is, see, the market's not going to have enough energy out here today to basically get to a lower low with the amount of energy that got expended yesterday. Well, to get to a lower low with volume. So that's how that's set up. I know it's counterintuitive because if you're a bear, you think you want it to go down. Well, you actually want it to go up or you want it to be flat today. If you're a bull, you want it to go after that swing low that was established yesterday at 2041.25, and you want to come into that area with lighter volume. So it's going to be wild just watching this whole thing shake out, because what you do have is this. Inside those parameters, we get a flat market. If we go higher, that volume is dying on the vine again. All that's doing is building cause for a larger move on the way down. What is really wild out here this morning is that if we take a look at the DAX in Germany, they're buying this DAX in Germany in a big way. And it's not all across the European continent. The FTSE is failing. The DAX right now, though, is up by $200. And, bottom line is that there's some action there. Now, the FTSE, whole different ballgame. What the FTSE is relating to and correlating with is this. The FTSE failed at its highs with monster volume. It came off the high, and you're back inside the lower range. The FTSE yesterday did, 951 million shares. So the FTSE is at 67.11. The FTSE is saying, hey, guess what? I'm going back down to 62.82. That's another $500 on the way down. So you have some divergence. That's huge divergence in Europe. No two ways about that. Gold is down now 330 right now. The equities, one of the Tigers wanted to take a look at Great Panther. Great Panther's trading at 54 cents. And this thing needs a wide price spread and accelerated volume, and it needs it pronto, too, by the way. You want to see this get back inside. Well, it's there right now, but just barely. It's 0.5543. You're at 0.5409. It's not. You don't have sellers in the stock, but you don't have buyers in the stock either. That's what's going on with Great Panther. And I happen to own Great Panther. The Go Report owns Great Panther. So we'll see where this drifts down to. It's certainly drifting down to, but we do need buyers in that equity. We need the wide price spread, accelerated volume. If you listen to the show yesterday afternoon, if you are an owner of Gold Corp, you got to be really careful. Gold Corp, folks, is having a problem in Mexico with one of its mines. It hasn't been a huge problem yet, but it very well could be a huge problem. And I was looking at this and why is this thing getting smoked? And what it has to do with is that one of the states that they have a mine, I don't know if it's one or two drug cartels have decided that they want to tax the mine. And they've kidnapped, last week they kidnapped like 4 employees. The real problem, I see anyway, is that this is the same state where those crazy traffickers basically killed, 43 kids. That's the place we're talking about, which is like, you got to be kidding me. I don't even understand that whole concept of why they killed the kids, just to give the government a heads up or something. But that's the same state. So you're talking about serious business here. Torex Gold, and you talk about, I talk many times about Russia, that in the gold mining business or any mining business, the way that dictators would basically do it is that they'd let you build the mine and then they take the gold. Well, that's exactly what's happening with Torex Gold. Torex is a miner. It took them years to get this mine up and going, and guess what? As soon as it's up and going, they just start producing about a year ago now. Bottom line, last year they made zero. Now they're producing about 250 million of gold. Well, guess what? Those traffickers in the same area, basically, I think at one point they had 300 of their employees. and so they're going to have some big problems. And what happens is this, is that at the mine structure itself, they have plenty of guards. It's from when the miners are going from that structure to the villages they live. That's where they basically kidnap them all, and then they got to pay the ransom. So, we'll see where that does shake out. But that's something that you're going to have to keep your eye on. Gold Corp right now is trading out at 1824, and it showed strength. I mean, this thing showed some decent strength, coming out on the 16th. But it looks to me like right now it's going to go back and going to test this 1701 area. So Dow right now is up 47. You get the NASDAQ up 4. S&Ps are up 6. Now, see, the NASDAQ is having a problem. That's really intriguing because that was the indice that was taking us to highs. What's bringing down the NASDAQ right now is Vipul Communication. Western Digital's down $1.86, Qualcomm's off $1, and Citrix is down 60. Bringing it up, you got SanDisk up $3.99. Oh, we're gonna have to go back to see what look at that. Mylan Pharmaceuticals up $2.10. Intel's up 73 cents. Expedia is up 78. We go back to SanDisk for a second. Let's see what we got here. Oh, that's a dead cat bounce. Okay, so check this out. So SanDisk is off its highs of 106. You're at 84. Yeah, that's just coming into his gap down. The gap down is at that 86.95. That's where that wants to get into. Inside the Dow Industrials, when we take a look at the strength versus the weakness, strength inside the Dow right now, you have Intel as the leader, up 79 cents. Goldman Sachs is up 222. We have United Health up 143, and GE is up 24. Taken away from it on the way down, you got Walmart's flat. Visa's having a hard time. Visa's down 121. You get Procter & Gamble off 39, and Cisco is down 8. We go over to Apple. We take a look at Apple. Apple right now is trading at 122.80. And, Apple's come off this high. Actually, hey, check this out. Apple's an ABC structure on the way down. Thanks, Terry. Okay, here, watch this. A point on Apple. 133. B, it's only $7. No, it's $8. 133. 1 second. Yeah, $8. 133 to 125. The B point had 56 million shares. You took it out in 88. Okay, so $8 off of. It's finishing ABC down. 121 is the ABC down. A to B equals C to D is 121. But you know what happens? Is that we'll see. In fact, I don't know if I've seen Apple do an ABC structure down in years. That's a subtle ABC structure, but it's absolutely an ABC structure down. It took that B point out, took it out with juice. We take a look at some of the indices out here. You had the SPY. The SPY right now, no volume whatsoever. It's up 30 cents. You get 10 million shares trading. Small caps. Small caps are going to be tricky here. Small caps are up 16 cents, 1.7 million. That's no volume whatsoever. And the 3Qs, we take a look at the 3Qs. That is flat. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Don't forget, you can get all the programming at TFNN right on your cell phone. TFNN.mobi. Take it with you, folks, 24 hours a day. Dow right now is up 44. NASDAQ's up 3. S&P's up 5. And then NASDAQ futures are flat. We're going to be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow right now is up 32. You get the Nasdaq up 5. S&Ps are up 3.5. Gold's down 430. We get the 10-year and the 30-year both flat. Let's go to John in Philly. Hey, John, what's going on, brother?
Tommy, good morning to you, sir. Thanks for doing this show. Appreciate it.
Absolutely, man. I love it.
Tommy, I secondly appreciate your thorough review there on the bond market and PLT. And I have to just admire the discipline you've shown literally over like 18, 19 months, not getting tempted to short those lows late 2013 and following the bull phase correctly all the way up into January. So now here we are. The very specific question I've got for you is this. In TLT, or 126.50,
right.
I observe two things. Just overhead is 127.70, and that is the spike high of October 2014.
Right.
And then above that is the 2012 high at 132. My question, Tommy, very specifically, would you be looking on this bounce in TLT to expect to see a trading high at that October spike high 127.70 and up at 132?
Yeah, now, okay, so check this out, folks, okay? This is what's pretty cool, right? So what I've seen is this, and this is always a little tricky, folks, but it's tricky and it's not tricky, and this is what it is. When you're making a high, right, picture something, you know, price and volume, there's absolutely no way mathematically you can keep going to higher highs with volume. It just doesn't happen, okay? So at some point along the way, you go to a higher high, the volume dies, right? Now, if the volume just dies and you come off that high with light volume, it's no big deal. It doesn't mean it's the end of the market, okay? It just means that that's what happens. But when you come off that high with volume, which we did, then you go back up. What you normally do, John, is go right to where you're talking about, which would be the January 6th high, which is the low of that is 130, the high is 132. That's where I'm going to be looking to sell it, man. Right in there.
Excellent. Thanks, Tommy.
Okay, have a great one, folks. Have a safe one. You stay right there, man. Mr. Basil Chapman's going to be coming up in a bit, growling and prowling with you. Have a great one. Have a safe one, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.